save the world. feel now is closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same. So let's not waste a second of your time, shall we? Bada bing, bada boom, into the charts we go. So as we were saying earlier today, we got that little mini bounce on the chart. Let's just go to it really quick before we go to the price trapped as we had it. Let's see. So we go into the hourly time frame. We broke down all the stuff. We saw the short bubbles getting stacked up in a certain manner up here, was it? Yeah, we were talking about the 50x pool up here, and I said that's a pretty much a guaranteed region with the cloud intact, and they came back for that with a fury and
fatality.
and they gobbled up those shorts and came right back down into the pools below, and it was almost like the angle was pretty spot on, so we'll just delete that for now and then go back to our pitch fan region. I'm a little bit more animated because it's not 6 a.m. as I'm about to stream. It is almost pushing 10 p.m. and the New York session is open. So if it were a regular day, but it is the weekend, so it's just low liquidity traders and bots and grid trading bots that are trading in a certain pattern. So let's see how we are doing. We saw the daily candle close. Let's just go see where that daily candle closed, shall we? All right, so the daily candle closed with a wick up from this 6.5 region, and we are trying to get back down to the 618. Couldn't do it, so we got a massive buyback, slightly more than the previous 2 days. So that's interesting to note. And we're currently at an indecision point, holding that 0.65 region. Are we going to come up and negate this trend-based bearish fib level? As long as we maintain this level, this projection to the downside as it stands currently is on. But let's go into the liquidity and check it out some more. What is high block capital? Where it's when people leave their liquidity in the charts to get burnt to a crisp by the market maker and get their money repossessed. So let's see who got repossessed today. We just gave you a sneak peek that pool up over here. We can zoom in. Let's do that, shall we? So this was a recap from earlier today. So we were talking about these pools of this 50x pool up here at $173 million at 2909, and they went just slightly above that and wicked off their liquidity, said wham bam, thank you ma'am, took that money and came back down as these longs opened up into the green candles. Not a good look. You don't want to open up into green candles. You know what they call these breakout traders? Neophyte traders, because they're noobs and they just go right back into the liquidity and grab that $86 million and coming down below here. Let's go see who else opened and where. So far we're getting some pools of even Steven, slightly more on the short side than the downside, which is why we're seeing a rise here. On the immediate, I like to refer to these as on the right as ramen noodles because I'm in Japan here. So you see the broth here is thicker on the upside and slightly thinner down here to go grab this 37 million pool that opened up at the top here for these 100x longs down below here. It's getting mighty thick down below. Also to note on the 28.1 region and the 27.88 region for the long pool here. Although you lose a lot to Father Time. We did have a lot more over here on the candles as we go forward in time. In the 6 days of 1 minute data, you start to lose these blue bubbles, and that's why you have to expand your vision to the higher time frame. So let's do that now, shall we? As we expand our vision. And you know when that beat kicks, that's when it's time to expand it. So as it shows on the 7-day time frame, we got a imbalance to the downside here with a lot of longs opening up. We already recapped less than it was about 14 hours ago, about $30 billion down there at the sub 20k region. So are they going to come down and liquidity grab, spike off the liquidity, spawn some divergence with some A, B, C goodness? I don't know. Let's go to the higher time frame to find out. How's everyone doing out there? Been getting that weekend crab action. Hopefully you mean food crabs and not the itchy kind. Sorry, I just had to make a joke. I went to, where did we go? We went to Yakiniku. I don't know if you know Japanese beef. We went there last night. It's really nice because they have the grill in front of you. You get to cook it yourself, but you get smelly as heck afterwards. As we shift away from the 7-day time frame, on the monthly time frame, it shows a clear imbalance to the upside with double digits in the 31.5 region. You see this double digits of liquidity. Let's say I'm going to say you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 16, you got about $160 billion up here, maybe, plus. So that's a lot on the monthly time frame. As you look below, there isn't that much. However, if we just zoom into the minutia and just look what's above, you got $1 billion up here, as opposed to $2 billion down here. Do you come down to grab this before you go here? Although it's pretty even Steven on the monthly time frame on the immediate range for the wickage to occur. As we enter the weekly candle close, we got to see what the weekly candle's looking like. We'll check that out for you in a minute as we expand to the 3-month time frame. Sometimes it loads really quick and sometimes it takes like a minute. It's weird. My internet is strange. Like, check this out. It shows my kbps down here. I get like 9,000 sometimes, and then sometimes it just goes to like 1,000 and turns red. It's just my internet provider's like kind of garbage. I got the best computer in the game, so it has nothing to do with my computer, unfortunately. So yeah, as you look at the 3-month time frame, you see this is imbalanced slightly to the downside. Well, I don't even know if that's slight, because you got over 100 billion down here at 22.4, and it's getting mighty thick in the yellow region, almost screaming take me, and you got this whole caked up region down below. Although if the narrative is bullish and they're just deciding not to hit them for whatever reason, they can just keep going up. There is liquidity in the double digits up here, just not as thick. You do have a thick region at 31.2 that I'd like to see popped. If the narrative is to the downside, I could see them going up to 31.2, popping this 54 billion, spawning some bearish divergence off their liquidity, getting that extra liquidity for their longs, and then switching over to short and spiking down to stab this with a fury as they shift down into that region. But because beyond 31.2, it starts to taper just a little bit on this time frame on the 3-month. I like the 3-month matching my narrative of the bearish projection, 31.2. 31.2, I'll just remember that real quick, and then we will see what's going on the 6-month. 6-month also has double digits on the way to the downside at over 100 billion at 22.5, and the upside also containing that narrative to the upside, but just not in the same level of liquidity. You do have that 42 billion at 30,300. Let's just zoom in here and see what's above and below. So you got 17 billion at 27.9. You got 13 billion at 30k. On this time frame, it favors going down to here to spawn the divergence. Interesting to note. Let's go to the yearly. Oh yeah. There's something to be said about having a nice gaming chair. You can sit and relax and have a more relaxing stream as well. I like sitting sometimes, it's fun. So here we go. You got 31 billion at 30,000 even, as opposed to 31 billion at 28.4. You're stuck in between a rock and a hard place on that yearly time frame. If you go up above to 30,400, you got 48 billion here, and 9 billion down here, and 28 billion at 27.8, and you got 31 billion up here at 31.2. So on this yearly time frame, it's favoring going up to these pools to spawn some divergence at 31.2, similar to what we were seeing on the 3-month. So the yearly also coalesces with that idea of a bounce up to 31.2 to grab this. This is $100 billion at 30,800, between 30,400 and 30,800. And if we go just below, you do have that 31 that we already looks like we wicked off of. So this should be zero now. So that 28.4, 31 billion was taken. And so that wick here, sometimes this doesn't show a zero just yet, but the wick did go into this, so we should be at zero here. So they did wick off this this liquidity, and so this could be the play now to the upside. Let's go look for that in the charts, shall we? We already went over how it's even Steven, and there's this path up to 34.8 with over 100 billion there waiting to be taken. But also you have this narrative that could be taken to the downside, at least to 25k, to take out the 41 days of longs. We'll go back to the 3-month time frame. I'm liking that one right now, so let's go to the 3-month and we'll refer to that pool later. And let's go into the regular charts, shall we? Crabs are good though. I love crabs. Let's see. Oh, you're talking about the crab price action. All right. I see. I try to stay away from seafood. I always joke with my wife whenever she orders like tuna fish or something. I'm like, like that microplastic, because you know, you got that whole like plastic patch, the Great Pacific Plastic continent and stuff, and just the microplastic content in our diet is absurd. Did you know we eat a credit card of plastic every week in microplastics? So it's a very alarming thing for humanity right now. I would assume that's why a lot of people are experiencing, you know, some identity issues, let's say. Anyway, let's leave that at the door and go into the chart. So we have here, if we look at, we got the projections for both sides. The 236 for the bullish projection was maintained off of that 4-hour dump here. We got bought back up. Normally you see a double bottom, so we're going to see some sort of double bottom similar to this before you come out. You have just this rising wedge action. Are you going to come back down before you go up? Generally that's how it operates as a pattern. You get 1 and 2 out of the zone, so we're going to look for that in a minute. But so far so good on maintaining the bullish trend base fib level. We were talking yesterday about this potential holding or rejection of the 236 on the bearish one, but as soon as you fail that 236, we've seen with the last 2 weeks that when you fail that 236, you drop like a rock, and we did, but we didn't drop with the same fervor as last time. So is that just staving off a larger intent to drop more? Let's go to the weekly candle close and start our descent through the time frames. We start from up above and drop down below, so let's do that. We should probably do that with Momentum Master on, so here we go. Heads up display on, and turning on Momentum Master Ultimate, and so on and so forth. So one interesting thing to note on the weekly, baselines are at the top of the Keltner channel, and they are above the weekly price here. So if we do close with the bearish candle here, we could see this baseline cross down event confirm for the first time since over here. So the last time we had that was in May of last year. Okay, so well, we had another one over here in November 2021, but those baseline crossovers on the weekly do ensue with the massive burp, so to say. So if we start to see that cross down event on the weekly, that is no bueno, and they don't normally have fake outs, even if they have a cross up here for 2 weeks only to lead to the cross down later. At least they bring something after they occur. Same here, they occurred and it continued further. You had the cross up and then it did the double top fake out, but it always maintained the baselines as it went up on its journey. So if the baseline starts to cross down here and you're starting to see a rejection on the weekly at the adaptive, we previously tried to reclaim the weighted moving average and the adaptive moving average. By the way, this is Momentum Master for anyone new. This is link in the description, momentummaster.info for more information. We'll let that load for a second. But yeah, we're getting that potential rejection of the adaptive here. We had a week of trying to reclaim it after the tweezer top rejection here, and until we can get up into this region, the narrative to reclaim these as support is still not yet there. And also this baseline being above the price is when you start to think about shorting on every time frame, because everything is fractal in nature. Scroll down to features, toggle through the different things here, and you can look at like what I'm talking about with the trend cloud or the baselines. And yeah, this is where we're at the top of the channel. we are seeing some strength still maintained here in the trend cloud as it's starting to pick up in volume, particularly as we get into these weeks. So the volume is starting to get thicker, even though we had this 1 week of sell-off. So a lot of times when you get to the top of the Keltner channel, this Keltner channel is an ATR based Bollinger Band, which is more accurate than Bollinger Band. So if you get to the top of this, generally you like to come to the bottom or the middle. We use the cloud for that idea. So you come back, you kiss the cloud, and you keep going up. And if it trades up in an ascending channel way, that's kind of like our pitch fan idea. So right now we're reclaiming this weekly kiss. I like weekly and daily support lines only, so it keeps my chart clean. So we have these touches on the weekly here, and it also coincides with daily touches. So as of this moment, we are reclaiming one of these as support. If we can close with this above that yellow line I have here at 28,690, because you see all these wicks, these touches, the more touches, the more valid it is as a support. It could even go up a little bit higher here because you have all these touches from previous weeks in the past as well. So this is an important zone to try to maintain as support if you're trying to see more upside. Okay, if you're trying to see more downside, getting this negated and the 236 negated will bring you to the promised land down below at these 25,359 region, where it stops out all these longs. Okay, so weekly Momentum Master B has reset slightly, and by slight I mean 57, previously 99 to 57. That's 40 points of reset, and we've gone sideways, which is kind of interesting to note. The money flow is also coming beneath the RSI, which is suggesting some kind of kick back here into the RSI level. Previously here you had some hidden bullish divergence on the money flow here, and sure enough that was very hidden because it came with a fury back up to the upside here, and it was beneath the RSI. So a lot of times when you get the money flow above the RSI, you start to see these dumps, and then when it gets below the RSI, it comes back up. So this is kind of a back testable idea within the money flow and the RSI idea within Momentum Master B. So that's the weekly time frame. So let's go see how our 3-day and 5-day are. We're going to go down the time frames like a ladder, starting with the 5-day. So I'm discovering this stuff as you are. We previously saw this cross down event on the 5-day, and that's what led us to believe as long as we maintain these baselines, even if we come up to here into this region and get rejected, this cross down event on the 5-day has ensued. It's locked in and loaded. Do you get negations of that? You sure do. So it's nothing is written in stone just because you have a baseline cross down event. But it's interesting to note as you monitor the journey lower or higher if you see the cross up event. Similar to here, you had, where was the cross up? You had the cross up here, and then we sure had that play out as well. So the 5-day, not really a tradable time frame to me, but just something you glean from time to time to see where it's at. You got 3 days and 11 hours for this to close, and where does it close is anyone's guess. You are getting that exhaustion on the Williams here. Could open up like a duck-billed platypus and dump out its momentum on you at any given moment in those 3 days. Interesting to note. Everything's kind of at the high level, but not quite overbought just yet on the RSI, and the money flow and the stochastic RSI could still go up a little bit more. Let's go down to the 3-day. We got 2 days and 11 hours for that to close, 1 day before the 5-day. So this one is also looking to kind of fade here by the looks of it. It's getting ambiguous at the 29 value point, and you're getting this overbought alarming, 3 alarming chances here. So are you going to start to see this reset some of the Williams? I don't know. Let's go into the regular. I always like to end it with I don't know because it is true. I'm just figuring this out and reading this like tea leaves as well, and then it just so happens a lot of times it comes to be the case. All right, so we're at the top of the Keltner channel, starting to come down out of it on the 3-day here. You had the cross down event prior to this dump, so that's why these things are noteworthy. They're leading moving average formulas. The baselines are your first sign of reversal. The baselines are one of the few leading moving average formulas you will find in the market. When price action rests on or above these, the baselines begin to cross, upside begins. Conversely, as the price action closes beneath these and begin to cross, downside begins. While this formula works well expressing the first signs of fatigue on all time frames, this will ultimately be a scalper's dream. And it sure is, because there's a lot of people in the Momentum Master Discord getting funded just off of this key feature alone. This is why I turned the opacity down and look at this in its prominence, because it is something to take note of. And then the daily's closing beneath this on the 3-day is also suggestive of something. So I don't know, are we in a distribution phase? It looks like that from the 3-day, similar to here, and you're getting that larger dump ensuing. Okay, so let's go to the daily. So the daily had a cross down event, and then we saw that here it was preemptive on this day, and then sure enough we had 6 days of downside after that. And we talked about that with the 22 back here, 22-hour time frame, and the 12 and the 6 we're all showing that in advance. And so you're getting the upside cross here, which is kind of keeping us at this ambiguous point. And we are also holding the adaptive moving average and the cloud on this time frame. Previously the cloud was curving, and I was looking at it to do something like this. You know, if you were going to dump, like, were you going to make this angle, you know, and then start to fade? But we've been holding it in a strange fashion going up, which is suggesting a stab to the upside, perhaps, just like we were talking about with that 31.2 pool at 51 billion up here. So if you're going down to this region, you want to avoid paying as many shorts as possible. And how do you do that? With scam wicks that take their liquidity and fund your journey down there. So you have that stop hunt rise, drop to the downside if you are truly going down. And we have yet to see that. We have a lot of like fake out wicks around this region, so that's creating pools of liquidity here, but I'm not necessarily sold on the short just yet, which is why I'm not in it. I'm not in the short just yet. I don't buy it. I want to see, like, it would be nice to see the shorts get smashed up to here and then come down to here and take out the longs as they get induced. But I could be wrong. We could just be slowly bleeding out into this pool, and I just missed my idea for that short. Who knows? We did have our pool up there already. But as we're holding this daily time frame and the adaptive moving average, the one thing that is worrisome is the baseline is not really taking off at all, and that's probably due to the suppression of the 3-day and the 5-day kind of starting to conflict with this and be, you know, countermining their ideas and being ambiguous. Let's look at Momentum Master B. All right, so we've been seeing this kind of meandering, stuttering as we head upwards and not really going that far up, kind of just sideways almost. We did go from here to here, which is 6% increase, but that's 6% for an entire daily time frame to get overbought. I guess we did do that previously here, and we got overbought in 4 or 5 days at 11%. So that was kind of just a liquidity grab before they dumped it. Is this a more steady, minor accumulation to go up and switch sides? I have no idea. But the volume is kind of tapering off here on the daily time frame. What does that mean? If the price is going up and the volume's going down, that suggests the interest of buyers is waning, which means downside could be in store as you get overbought on the daily time frame. As we go to the 22, the one interesting thing to note was a few streams ago too, I believe, we were talking about this curvature here. And that was before this candle to the upside. I think it was on Friday. So it was like around maybe Maybe it was around that time. I don't remember, but I remember there was a curvature I was looking at before it was occurring, and I was like, and then now we're starting to see this volume re-enter. So it's interesting to note that this sell-off here and this buyback wick on the 22-hour on this 236, that is the bullish trend base level, started to see this volume re-enter here. So are we starting to see the idea of a surge up occurring here on the 22-hour time frame, and then this bounce off the 50 to come up here? I don't know. That's kind of, you got this inverted head and shoulders vibe happening on the Williams here, and inverted head and shoulders vibe happening on the 22. So you got this shoulder, head, and shoulder idea. I don't like drawing patterns on my charts anymore. I'm sure a lot of you are experienced enough to see them without drawing them. If you draw them there, you're trying to it locks you into seeing it that one thing only. It's best for me anyway to just not draw it and just see them as the patterns morph and shift. So we go to the 12-hour here, and again you're still seeing that shoulder, head, and shoulder inverse, head and shoulder out of here. Perhaps you got the higher time frame, shoulder, head, and shoulder to the downside, possibly speaking, and you're getting that double top vibe, the M pattern on the 12-hour here, and you got the cross down on the average of the Williams here, but it's not in an overbought status, so the alarm has not been set. So this could just be a natural retrace before it comes up. The reason why these alarms are here is not random. I back tested and smoothed out the Williams, and all of these levels are back tested by yours truly to find those moments in time where the alarms do play out. And in the moment, surely you can go back and see this alarm was playing out as we said, and this was when it occurred. So the alarm does sound the alarm when it needs to. And so when there's no alarm here, that doesn't necessarily mean because it's high you need to think about shorting just yet. So we're seeing the same entry of volume here on the 12-hour time frame. This was previously concerning to me, but as this starts to shift, I start to see momentum changing. And when this angle changes to the upside, it's something that cannot really be stopped. As I see, if it starts heading in this direction, that means upside in my mind. So when these curve in a manner, it starts to suggest that there's some sort of thing occurring, especially if it's getting thicker. If it's getting thinner here, that's when you start to wonder. And then here we were looking at other time frames when this was showing, we were starting to see that entry point here on the 4-hour, and we put that out for you as well. But this is just interesting to note that the volume is starting to shift in here on the 22 and the 12, conflicting with the daily in some way. But it's not in an upward angle just yet, so this could just be a situation like this where it kind of just does something for a moment in time. So this could be a momentary upside before continuing down. But yeah, interesting to note. No real entry levels for the Momentum Master B on the 12-hour. We're going to go to the 6. Okay. 6-hour cloud is kind of ambiguous right now, and you are getting that thinning out volume. So we had this previous thickness that tapered off here, and you got some big player selling out, and it caused it to thin out here, and you're seeing it hold. We have 4 hours for the next candle close. The previous one is this kind of indecision spinning top with long wicks. So are we seeing this? We did get the cross down confirmation here. So the cross down we had previously was the thing that kept us in the short here, and we saw that come down with the fervor. So if you maintain these baselines, if you are in a short from this 236 level, as long as you maintain these baselines upon the candle close, similar to we did here, then you could be in store for a downside play on the 6-hour time frame here. The 6-hour time frame is getting oversold though, and then as you get oversold, here was starting to get we started to bounce off the MACD, and then we spawned the bearish divergence on the money flow here, and the money flow was above the RSI as we said, and when the money flow gets above the RSI, we come back down, and we did. Here it's getting beneath the RSI, so this is not necessarily suggesting here is the point where we will drop. Maybe we see this come up and then drop. So how far up do we go on the 6-hour time frame? I don't like to short oversold 6-hour time frames, similar to why I was looking for long back here on this cross up here. We're not in this cross up position, so this is not ideal for a long. This was an ideal long, and we put that out to you as well with the double bottom W formation, 37 billion retaken here off the divergence, and saw that to the upside. With the rising sun, this is definitely not the same criteria, so not the ideal long for me. Still waiting for those ideal entries. Patience is the key, as I've said the other day. So looking for the 4-hour here. 4-hour time frame starting to get some cloud action here, getting some curvature to the upside here, which is why the candles are maintaining their levels. So interesting how this thing coalesces together. I did not know it would do this when I made each component and arranged them the way they were. It just kind of coalesced that way, and then I found these back tested levels which kind of repeat themselves. So if you find that repetition in these cloud kiss ideas, you break through the cloud, you kiss it, you continue. You know, here we are back to the cloud, kissing it, kind of getting somewhat, we got somewhat rejected off of the 200 weighted moving average here. Are we trying to reclaim it? We are holding the bullish ATR levels. So this ATR level is holding from this wick that was on the daily time frame. We're getting the volume kind of taper here, not any volume stepping up to the plate, although that's natural for the weekend. And the 4-hour is slowly making its way up, but this could just be a trap door to drop it down. Again, we did talk about the double bottom idea, similar to here. You do 2W formation out. You always got McDonald's and Wendy's. That's the two patterns you see. The money flow is coming above the RSI here, which is suggesting some sort of either chill out or surge to drop it. Let's go to the hourly, which is currently in a double top formation, triple top actually. It did its double top, came down to the 50, got a recharge, and came up here. The MACD did come down to the Williams here and say what's up, and gave it a little bit of a boost. So weird how they interact too, like the MACD coming down to say what's up to the Williams. I made these in the same domain structure where it's, you know, normalized within 100 to negative 100. So the MACD normally is in the thousands, and so this automatically, the math makes it stay in this framework, and then they interact somehow. I don't really understand why, but it's just interesting to note either way. So you're seeing the MACD and the Williams come up in this manner on the hourly time frame in this slow but steady way. The interesting thing to note here is our rejection of the cloud on the hourly time frame. We talked about it previously because the cloud was thick, and we saw this cross up event, and we said we would come up and get that rejection on the cloud, and we did, because when it's thick like this, you can't really turn that ship around. It's kind of like a Titanic. Once the ship is heading towards that iceberg, you can't really change the momentum of that ship as it's going. It's kind of setting into motion the course, and you have to steer it by slight degrees over time. So you have to kind of see the wake. You see the wake of the volume, and so the wake of the volume is pretty thick here. So you're getting this sell-off wick as they try to change the wake and the angle of this on the daily time or the hourly time frame. So you'd see a shift like this as it stabs through. So if it was really trying to break through it, it would break through, and then it would come back and retest and continue. And then this, if it was thinning here, if the cloud started to thin in a manner around here, and then you come back to kiss it, you know, then that's kind of where it's like a very ideal setup. And then even if it wicks beneath it and gets bought back, like it goes something crazy and creates your double bottom and then gets bought back, and then goes, and then that thinning spawns the divergence out of there. You know, like that's kind of what you need to see is in terms of the thinning of the cloud, and this thick purpleness of it shows that it's not necessarily done per se. So doesn't always work out that way. You had this huge dump here and you had this purple cloud, but we stayed above it, and then we kind of meandered around the cloud before we dumped. So it doesn't always stay true 100% of the time. However, if you do come up above the cloud and you reclaim it on some time frames and you got the crossover events and it thins here, then you're safe to say it's probably going to continue in that manner. So you get the cloud kiss, it starts to shift, and then you can at least see some percent in that direction. Okay, so we're getting that kind of sell-off wick here on the hourly, which closes in 30 minutes as we get to the lower time frame. And yeah, not really sold on this volume or idea per se. Interesting to note is the adaptive and the weighted are just around the price action, saying make up your mind here. This is a pivotal idea here, and then they're just range trading around this idea. So if we're going to see some support, we saw some previously here with the weighted and the adaptive here before we surged up on Friday, May 5th. So this type of idea here, are we trying to do the same thing, but is it a similar manner where we shoot up here? The adaptive and the weighted do come into play. This is why you see rejection off the adaptive and then we come down. If we hold the adaptive, we go up. So this adaptive weighted holding is important, and we previously are getting bought back to hold it. So as long as you stay above these lines, it is kind of a bullish sign. You'd need to see some volume step up to the plate, as once again it would need to pierce through the cloud, get rejected off of it, come back, and then continue for that to be true, a true move. So you'd have to see some sort of shift and thinning of this volume here. Okay, so let's go to the 15-minute and then take some questions and say what's up to you guys. I'm gonna remove this though, but that is an interesting idea. We're not seeing the thinning just yet though, so I'm not saying this is gonna happen necessarily. So on the 15-minute, you are doing that thinning idea, so that you can look at all these time frames and back test them yourself and see how that occurs and how we break out and come back to those to try to find support on them. And we've been unable to find that support, and we are getting that thinning of that purple cloud here and trying to break the ATR to the upside here on the 15-minute time frame. So it's going to be less secure on the 15-minute because there's more events happening on that time, but everything is fractal in nature. So if you can reclaim those clouds and you get that cross up and you have that higher time frame support, it will give you that sniper entry level at the bare minimum, and you have that thinning idea in your mind as you go up. So if you have that thinning idea in mind as you go up, it's very similar, right? So it's a similar kind of context here. You have this, oh no, bearish, purple cloud. Wait, it's thinning. Wait, what's going on with that? Boom. And then it's like the same thing. If you have this purple, oh my gosh, it's bearish. What, fake out. And then like thinning, what is the thinning about? Are we going up? So that's why the trend cloud says the volume weighted cloud formula, which expands and thins according to the amount of volume present in the asset. Price tends to gravitate and retest the cloud as a point of resistance or support. Thick clouds represent strong trends. Thin clouds represent weakness or consolidation points. Keep in mind, when the cloud thins, a potential expansion or reversal is in. Play the cross, and you just look for the volume supporting it with the bullish divergence crystals that are showing here, and you could play this scalp. So if we were so inclined and looking at this like an hour or so ago, an hour and a half ago, so if this were at 9, about an hour ago, hour and a half. I was right. So if we're at an hour and a half ago and we saw this cross confirmed with the baselines beneath the candle here, and we saw the volume step in with the divergence crystals here, and we played the money flow divergence, like you could have just been scalping this idea and just smoothly watching this as for what it will give you, and just looking to play different ranges, maybe play it to the top of the Keltner channel and leave a runner in profit. And that's what you do for these time frames. So 5 minute. So we're seeing the New York getting oversold, but you have the Williams kind of opening up here, which could, unless it starts to curve and remove this beak-like nature, then we could and start to see this double top. You are getting overbought here, and it's kind of ambiguous on the 5 minute. You did get the cross down event, and see, as you get into these lower time frames, you get a lot of false signals, so you have to use the higher time frame support, which is why sometimes you should use these kind of ideas where you have different time frames open on different split charts. I don't know if your monitor can handle it, but it is a interesting thing to do, to have different time frames going. It's probably going to lag my stream now. Let's see if it will load properly. So this is what I do. I'll set it up how I do it, all right, for BTC. So we're going to set it up if it will load properly. Come on. Why is it not loading? I hope I'm still... Yo, what's up, Prehab? Let's just talk to the chat while these load. Hopefully it loads in time. Why is it acting strange here? Come on. There we go. We'll let that load a little bit. So what's up, everyone? How's everyone doing out there on this nice Sunday, the May 7th? Hope you like your coffee. Coffee's good. Did you know that caffeine was one of the key drugs? Caffeine was one of the key drugs for the Age of Enlightenment in the Renaissance. It was one of the key things they imported to get their talking and philosophizing up. So there's nothing wrong with a little bit of substance abuse every now and then. Everything in moderation, folks. Everything in moderation. If this will load, come on, baby. Here we go. I don't know why it's acting so strange with this loading. Why is my thing so slow, internet? Alright, so we'll show you how we do it. Come on. Where is it? Why is it showing? So what I like to do is I have it I have multiple time frames up here, right? I do post these charts in the room, so I'm sure a lot of you see what I do, but I basically have different time frames, so I'm looking at different things at the same time. So you see this hourly baseline holding, and then you coalesce that with the 5 minute entry or the 15 here. So let's look at that. So you could just, time your entry and look at different things at different times. and see how the volume is doing and how the divergence is forming and whether the ATR is holding and the cloud is holding on different time frames. And you can see the hourly here. And so you have different things open. So even though if you don't have multiple screens, you can have multiple things, panels open, watching the price action like this as it pierces the cloud, as we talked about. So if it pierces this 1 hour cloud and holds it, you're good to go on that long idea if you were in that crossover event on the divergence spawned on the 15 here as New York opened. So yeah, this is how we look at price action generally. And then if you want to throw on like liquidation levels and stuff, you can see how many longs and shorts open up here. This indicator, in case you don't know, it's a free one by ML application. You look for liquidation levels version 2, and then you type in the threshold of 0.1 for every 100K trader. You show the statistics to see what amounts they're opening at, and you can see more bubbles opening on whatever side. And so this could come grab those 100xers on the long side thereafter, and it helps you to just gauge what's going on. Similar to high block, but doesn't cost the money of high block. Let's go load high block and say what's up one last time and bid you adieu. I think we did a thorough analysis of Bitcoin. I don't know what you guys thought, but we're seeing a little bit of some longs open up here, which is now good for a long idea. Now, no interest in the shorts really, and that's confirmed with this here. So they could come up, spike out, take out the 100xers and come back down, and that would coincide with the cloud idea here at 29.34. It would be right at the top of these 100xers. So it pierces the cloud, comes back down for that double bottom idea off some of these 50xers, and then by weekly candle close we see ourselves to the upside perhaps. Just an idea. Just an idea. Alright, so let's see what you guys have to say, and then we'll bid you adieu. Pre and post everything for me, dump it. Pre-workout, nice. Caffeine is a miracle drug, I love it. Yeah, it keeps your focus high. I mean, I'm already focused all the time, so it just keeps me locked and loaded even more so. Alright, so I would like to do USDT dominance and stuff and just see if there's anything we can glean off of that idea. So we're going to go to turn this off real quick. And then go to the USDT dominance and see how that's been going. So we previously had some idea to go up and take some of that USDT out. I think a lot of the USDT is going into the altcoins and Pepe and all that stuff. So that's why everyone's USDT is going out. When the dominance drops, that means people are not in USDT. They're investing it and buying coins with that, whether it's BTC or altcoins. So the idea of USDT dominance dropping means there's not as much USDT on the sidelines, which means people are trading with the USDT. As it comes up here, people are getting kicked into USDT, whether buying through onboards to the exchange or being kicked out of their trade. So dropping here on Saturday from Bitcoin kicks people out of their longs into USDT perhaps. So they probably get kicked out in their stable coin, and that's what the dominance implies. So as you're seeing this shoulder, head and shoulder idea, you could see this kick more people out to their USDT in the coming thing. So if we juxtapose that with Bitcoin dominance, we could see if that is ensuing for Bitcoin dominance or not. Let's look at, we're not going to do a thorough analysis. I'm sorry, I did way too much already, so we're going to just leave it at a surface level. So Bitcoin dominance does have, it's kind of consolidating here. Shout out to my guys in the Momentum Master Discord saying idiot boxing. It's idiot boxing right now, so this idiot box is not really giving me much information other than it's just consolidating between these ranges at this point. So it's being dominant and not as dominant within a range of basically here and here between 47.96 and 48.81. So it's just ranging between being dominant by only 1% or 2%. And that's probably because the altcoins are getting their little fake influencer coin pump of Pepe and the other coins like that. So they're kind of stealing the thunder from Bitcoin as it consolidates and people take their gains and put it back into Bitcoin and play with Bitcoin with their gains and stuff like that. So that's what the consolidation represents to me alongside the USDT. But there's a clear direction in the USDT, which was they got kicked out into it. So maybe the retrace on Pepe kicked a lot of neophytes out into their USDT from the Pepe reset. I don't really follow the Pepe thing so much, but you are getting this potential cloud push here up on this, but the angle in which how high this could just be a hard rejection and then go back into it. A lot of times if it's like this angle, they just break down through it. So you don't really want to look for cloud kisses at this angle so much. It would be a more, I don't know, what number would that be on the clock? Like 3 o'clock? No, 3 o'clock would be diagonal or like horizontal. It'd be like 2 o'clock. This is maybe like 1 o'clock. So you want it a little bit more like 30-degree angle or something like that. Not quite 35-degree angle or so. Wait, I can do the angles. Hold up. I put the angles on my trend line so I can see that. So you want to see like kind of like a 35-degree angle. And then the cloud kiss, like this kind of steep angle is just going to fade out between it and then probably bearishly retest and go down. So this kind of thing also could do that with the angle. You generally want to see a less steep angle in the increase for it to find support on the cloud. But yeah. Alright, so that's about it. That's my story and I'm sticking to it. I don't know if you got anything from that, but we need to see this cloud thin out on the hourly before any upside can begin. Once again, it needs to kind of break through and kind of thin out and continue here and reset some time frames with that holding and capturing some. You do have some short pools up here at 188 million at 29,179. This 173 million at 2909. So this short pool of 50xers still screaming take me, as is these 194 million at 20x that opened all the way down here. They are underwater. So this gives the fingerprint of the possibility of them coming back to this region. So they could come back and take these guys too. This is getting stacked up quite nicely here, whereas the sparseness is showing a little bit more down here, less longs than the thickness of the bands combined. With the thickness of the bubbles combined, I am Captain Liquidation. Are they going to take back the liquidity up here? As it stands right here with the noodles being stacked up above, it looks thicker to me on this 1 minute time frame to be taking up some of these pools, at least to 29,179 could be a frugal way to look at it. And beyond, you have all these other pools looking stacked as well. But as what goes up must come down, so if they take out the 50xers, and you can consider possibly, are there bigger bubbles opening up here? Are they going to come down into these? At some point they will. There's a thick band occurring there. We talked about the 31.2, 54 billion up there as a recap. That that region is getting quite stacked up even into the yearly time frames. And if you're going to go down, you'd have to go attack something up here before you come down here. Was that this? I don't know, because it's thick again. So could they come back into this and take some of this out before they come down into this region? We'll find out. Only Father Time can tell us the answer. So thank you very much, everyone, and I will catch you on the flip. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the precision, the accuracy, and all that fun stuff and more on the live. So we'll catch you next time.